Inflation 101, part 3, the housing crash. Is it happening? We're about to talk about it right now. Let's go. What's going on, my good people? Otis L. Milton here, the Mortgage Millennial. Welcome back to the Millennial Mindset channel. And if you haven't been here before, welcome. We welcome you. Please make sure you subscribe, like, comment. I love the feedback and dialogue in the comments. But we're going to talk about some amazing topics on this channel. And today we're talking about the housing crash. This is part 3 installment of Inflation 101. So let's jump right into it. This is part 3 of Inflation 101, the housing market crash. And so today we're going to be talking about what inflation looks like in terms of the housing market, what we're seeing, and what we can expect to see in the near future. But we must travel through a short time of history to know how we got here and what we're doing while we're here and what we're going to do to get out of here. Okay. So currently we are seeing a huge downturn in terms of mortgage applications, right? And so that is a trickle down effect. Please watch Inflation 101, 102, where I talk about maybe some of the reasons why we're seeing those. I don't want this video to be too long, and I really want to focus on housing, right? So we're starting with mortgage applications because you have to get a mortgage to actually buy a home, right? And so right now, mortgage applications are down over 50% year over year, right? So 50% down from last year to this year. Non-cash out refinance mortgage applications are down actually 93%. Reason being, a lot of people already got into lower rates over the last 2 years. Rates are much higher, so there will be no reason to do a non-cash out refinance to lower your rate when your rate's already low. The only type of refinances that we're seeing in the market now are people that are needing to leverage their equity, pull some cash out. Yes, they're going to be paying a little bit more in interest rate, but they're able to tap into the equity. So those are the only refinances. So the mortgage application decline is telling us a story, right? It's the beginning writing on the wall, the preface of this book of inflation and housing, okay? So that's what's happening right now. Remember that. We're going to come back to that. But mortgage applications are down dramatically. So let's cross over. Once someone obtains their pre-approval, they get out there and start shopping. And right now we're seeing housing inventory increase. We've had the lowest number of housing, especially in your major metropolitan areas, California to be exact, LA, where I am, inventory has been scarce over the last 18, 24 months, right? And we are seeing that inventory number pick up week by week, right? More and more inventory coming out. Reason being, it's not that a lot more people are listing their houses to sell, is that the homes are sitting on the market longer than they were. So fast forward, rewind, let's go back 8 months ago, 12 months ago. If a property hit the market, there was a good chance that it was going to be in escrow in the next 48 hours. Offers were being submitted day of. You could say, at least here in my local market, we were seeing at least somewhere between 10 to 25 offers per property. Half of them were over the list price. Another half of them probably had no contingencies whatsoever. And that's what's changed, right? Because now we're seeing properties sit on the market 20, 30, 45 days. We've even gotten to the point where we're seeing price cuts, right? And people are getting this all mixed up here, right? They are looking at price cuts as price reduction, right? And so what we're seeing is these properties aren't being cut by price. The properties are being cut back into the original number that they should have been, right? Because especially here in California, we have experienced hyper equity growth over the last 2 years, right? 2020, we had 19% equity growth in California. 2021, we had over 20% equity growth, right? So someone's house could be 40% more than they bought it 2 years ago. Now, that sounds great. I've helped a lot of clients purchase property in these last 2 years, and they're sitting on a ton of equity. But that amount of equity growth in that short amount of time is not sustainable, and it's really not real. And we're about to talk about why it's not real, right? And so some of it is real. Don't get me wrong. On average, a healthy market should be appreciating somewhere between 5 and 10% in a good space, right? That's exceptional. Where we've been is astronomical, out of this world. And so Now we're seeing the prices kind of come back down. It's not that they're coming down, they're coming back to what they were worth in the first place. So you're not necessarily getting a deal, sorry guys, when you see a property listed for 600,000 and sit on the market for 30 days and now it's worth 550. And some people are like, oh my God, the property prices are going down. Well, no, the property's probably only worth $525,000 in the first place, right? And because of the acceleration of the equity, people were getting it, right? So something is worth whatever someone's willing to pay. And now with the rates being higher, people aren't willing to pay astronomical numbers over what the property is actually worth. And so I believe that we're going to actually see more quote unquote price cuts, and they're not true price cuts because you're really just going back down to what the property is worth. And that kind of ties into the next piece that I want to talk about. And so are we going to see huge price cuts, huge price reductions, discount sales, etc.? Yes, we will. But it won't be one for all, right? Real estate is very local. So you're going to have some markets and areas where are going to be more hard hit as we roll deeper into the recession, and you'll see some properties sold at discount. We'll see some foreclosures, not in abundance like we've seen in 08, but more than we've seen over the last 3 to 4 years, right? And so with that, it's almost like a perfect storm for a quote unquote market crash, right? But not to worry, right? And this is the conversation that I'm having with my clients. Now, a lot of you want to wait till the prices drop. You want to wait till interest rates get back down. But what happens when that happens? Your competition will be stiffer than it was over the last 2 years because you're going to have cash buyers, private entities, investors come in, and they're going to want to buy everything, and their pockets are deeper than yours. Especially, we all want something on a discount. So if you're even thinking about buying and you can afford to buy, you qualify, this is still the best time because your competition is much lower than it's going to be once this smoke settles and the rates, inflation starts to go down, rates start to go down, and house prices start to stagnate. It's much easier to get into a property, a little bit of a higher rate now, and as the market progresses, it gets better, you can refinance because you already have the asset, you already have the property. If you wait to actually buy the property, you may not be able to buy the property because your competition will be stiff. I started out in my real estate career post 2008, and it was an investor's delight. A lot of single family homeowner buyers, they were getting bid and outbid daily and just getting ran to the carpet because those cash buyers were buying it. These funds, venture capitalists, etc., were coming in and buying it, and you can't compete with them. Their pockets are much deeper, right? And so I'm saying all of this because this is what we can expect, okay? We can expect the rest of 2022 to be extremely volatile, all right? Until it's announced that we're officially in a recession. If you check out my last video, part 2 of Inflation 101, we are by definition in an inflation. We have experienced 2 consecutive quarters with a decline in our GDP. So by definition, we are in a recession right now. Now, this is going to be an interesting recession because we don't know how long it will last. But I do think it's not going to be, years, right? But this could be, 8 months, 12 months, 18 months, maybe on the max. But I think once that inflation peaks, which a lot of people believe it has, that starts to go down, rates will start to go down, the market will start to get healthy. And the pendulum is now swung. Now, message to those who are selling their property or thinking about selling their property, you might have missed your height, but that doesn't mean that this isn't a great time to buy, because your chances are really good if you get into escrow with someone now. They're a serious buyer. They really want to buy because they're paying more on their rate. So yes, you may not have an abundance of offers, and you may not be able to, take them to the cleaners and get 50 grand over what it's worth. That market has passed us. Okay. But if you're needing to sell, if you have a plan to sell, and you want to leverage your equity or your proceeds into another investment, another great time to do so. But I understand those sellers that are out there that are just stuck, like, hey, what am I going to do? I got a 3% rate. I can't afford to buy a house that's an upgrade from what I have at today's interest rates, right? And so I'm gonna show you a quick graph real quick, and let's take a look at this. You see here, $500,000 purchase. Let's say last year rates were at 3%. Look at the payment here. The payment is just a little bit over $2,100, and this is at a 3% interest rate. But let's look at purchasing that same property, $500,000, and we are now at a 6% interest rate. Okay, that payment now is $2,997. That's almost a $900 increase on the same purchase price, right? On the same loan amount. This is important. This is inflation. Your money not doing as much as it used to because the cost of borrowing money is now higher. Okay. Now, I pray to God this doesn't happen, but if we're being honest and realistic with ourselves and we're planning ahead, rates could hit 9%, right? And if rates hit 9% because inflation is just not cooling off, look at what that payment is for that same $500,000 purchase, $500,000 loan amount. Over $4,000 for the exact same property you could have bought 2.5 years ago on that rate. So I'm showing you this to add some context, okay? To give you some more insight so you can kind of put a graphic with it, some numbers with it, and you see the difference. Now, let's say you are that person and you buy this property at 6%. You got a $2,997 payment. The market recovers, but you actually got the property because your competition was less. That's why you were able to get the property. Let's say a year goes by, inflation is peaked, we're going down, and the mortgage rates are getting better. You can refinance that loan, get a 4.5%, but you already have the property. Now, if you go to buy when that rate's 4.5%, 4%, etc., everyone's going to get back in the market and try to buy because everyone's quote unquote waiting for the discount right now. So I'm giving you this so that you can be more informed and don't just, bite on the listening points that you have, or I'm just going to wait till it's my time. Your time is when you can afford it. The logistics can be worked out, but at the end of the day, although inventory is increasing, we have a housing shortage in America, especially in California. We're probably around 2 million homes short, at least in California, of what we would need to have a healthy market. So even with the inventory increasing, that housing shortage is still going to be there, right? And so to recap this all, this is what we're looking at. We're looking at some tougher times in the near future, the next 6 to 8 months, as this inflation kind of goes through, as we delve deeper into the recession. Once it gets announced, more layoffs will happen. Unfortunately, more jobs will be lost. Another indicator that we are headed to better times, and I hate to say this because it sounds so pessimistic, it sounds bad, but as the unemployment rate goes up, the inflation will go down because people, when you're not making as much money, you're going to spend less money, right? And so all of this is it's all a system, and this is not the first time this has happened. Just the way we've gotten here is a little bit different. Last time, 2008, it was led by predatory lending, other factors. This time it's led by an excess of money printing. We went through a global health pandemic. This is not something like we've experienced before in terms of how we got there. But now that we're here, we've been here before, right? I think this is the first time I've studied a lot of the recessions over the last 40, 50 years that we experienced. This one is the most unique because there's so many different markets and things affected all at once. Food, gas, mortgages, stock market, crypto, etc. Normally, it's not as many sectors hard hit. And so everybody's going to have to recover at the same time, which means the recovery is probably going to take a little bit longer. Okay. So with that being said, again, this is part 3 of it, Inflation 101, the housing crash. Will the housing market crash? If you like to use that term, yes, you're going to see some declines in certain areas. Does that mean you should wait? Probably not, because your competition is going to, they're also waiting. And they're going to be back out there when it gets better, and you're going to be, faced with more competition. So if you can afford to buy, you qualify. This is still a great time because rates and loans are always done to be, refinanced. At least my average clientele is going to refinance their home at least 1 to 2 times before they either sell it or do something else with the property, turn it into a rental. So please know that the rate now is not going to be the rate forever, but getting in now can mean the difference between you getting in or not. Okay. Inflation 101, part 3, the housing crash. Please like, comment, subscribe. I want to hear your thoughts. Do you think I'm spot on? Do you think, I might be off? Am I missing something? Let's talk about it in the comments. You guys know my motto. Until next time, my people, one love.